Peter, never a dull moment at Tesla. I think his biographer described this as Elon Musk in demon mode. What's going on?
That's a great question, what is going on at Tesla. Even by Elon Musk standards, it's been a pretty wild week. It started off last weekend with the announcement that they were going to cut 10% of their global workforce. That's about 14,000 jobs. There's reports that those cuts could be even deeper. Then during the week, we saw him go what he called balls to the wall on the autonomous taxi, which seems to have taken over as the company's priority from a $25,000 mass market car, which he was talking up at the last earnings call only 3 months ago. And investors have really been keen to see that move towards a mass market car to try and fill that hole in Tesla's sales that we're seeing. That was only the beginning of the week. In the rest of the week, we saw the company try to revive a shareholder vote on the $56 billion pay package for Elon that was struck down by a court in Delaware in January. They then had to recall all the Cybertrucks that they've sold in the US for a faulty accelerator pedal that could lead to accidents. And then, as you say, on the weekend, we saw price cuts in the US, China, Europe. It's 3 key markets. And that really suggests that sales may still be getting worse than what we saw in the previous quarter. He called off that trip to India that was planned for this week, citing these heavy obligations at Tesla. We've got the earnings call coming up on Tuesday, US time. So I think a lot of focus now is on that to see if we can get some clarity on what Tesla's strategy is.
It's not even halfway through the year, yet it's already been a wild ride for Tesla and its dedicated Tesla stock investors. If you've been a Tesla shareholder for a while, then you probably already know what to expect from the company's 2024 Q1 earnings, and the answer is not so much. CEO Elon Musk has previously said that this year won't be Tesla's best, so I personally won't be too surprised with the results. What I want to know is, how is the company planning to turn things around? And if this is also something that's on your mind, keep watching today's video, because we're going to explore a new Tesla partnership that could be a complete game changer for the company. Before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, that's exactly what I was going to ask about, Peter, because as you say, that chaos, those challenges very much reflected in their stock price at least, which is down more than 40% since the start of this year. But what are we looking to see, and what would reassure investors from this set of earnings, do you think, if anything?
Well, it looks like we're going to see a pretty bad set of numbers from Tesla come Tuesday. We've already seen that drop in sales. It's expected to report a 40% plunge in operating profit and its first revenue decline in 4 years. I think what investors want more than anything, though, is just some clarity on the strategy. As I said previously, it was only 3 months ago that on the earnings call, Musk was talking up progress on this $25,000 mass market car. Last week, the whole thing seems to have swung towards this autonomous self-driving taxi or robo-taxi, and we already know that Tesla's claims of full self-driving don't really exist. Full self-driving is not full self-driving. It still needs constant driver supervision. So it's going to take some time before we can get to a full self-driving robo-taxi. And we've seen that other companies from Uber to GM and Cruise who have tried this have had huge problems getting these cars on the road and keeping them on the road safely. So I think that will be the main thing that investors want from this, is some clarity on what is Tesla's strategy going forward.
We've seen many analysts talking about how Tesla needs to give us more clarity on its strategy and how it expects to continue growing amid increasing competition in the EV space. Recently, new reports came out about a new Tesla partnership that could be the company's way to respond to these concerns. According to the Korea Economic Daily, Tesla is apparently looking to procure electrodes for its own battery cells from LG Energy Solution on a large scale. The reports are saying that Tesla and LG Energy Solution are planning to sign a supply contract worth 6 trillion Korean won, or approximately $4.35, in the second half of this year. LG Energy Solution will apparently start delivering the electrodes to Tesla in 2025, and the two companies' contract is expected to last for a period of 6 to 7 years. We don't know exactly how many electrodes the contract covers, but we know that the agreed quantity will be sufficient for the batteries of around 1.3 to 1.4 million electric cars per year, according to people familiar with the matter. The Korean newspaper added that Tesla's purchasing team already made the order and detailed talks are currently underway. It also pointed out that the length of the contract, which is 6 to 7 years, coincides with Tesla's facelift release cycle. Not only that, but it interpreted the alleged order to mean that Tesla is moving forward with the production of its own batteries, as the subject of the order is a cell component and not finished battery cells. So, why is this a big deal for Tesla and Tesla stock investors? Let's find out. Hello everyone, and welcome back to Investocracy.
Third, not all stocks are created equal. We have what we used to call leaders, and the leaders, they are failing us. The biggest failure? Tesla, which is going down relentlessly in a totally scary pattern.
House of pain.
How much will Tesla lose this quarter? That's a common refrain. How about that pivot to going into robo-taxi? Well, Hertz tried that, going big with Teslas, and that failed. Why would that be any better for Tesla itself? The country's just not ready for self-driving cars. Instead, Americans want solid, inexpensive electric vehicles, not expensive ones. Those are done. And they sure don't want Tesla's Cybertruck. I thought Elon Musk fanboys would buy it, but the darn thing has what I call no mojo. Maybe because it needs to be advertised? I don't know. I mean, perhaps Tesla needs to run a traditional pickup truck ad where some gravelly voiced guy talks about ditching the Ford F-150 because the Cybertruck has bulletproof windows. I can't think of any other selling point. Best I can do.
Tesla is known to pursue several procurement channels in its battery strategy. On one hand, the automaker traditionally procures battery cells from various suppliers, including LG Energy Solution, CATL, and BYD. But one of Tesla's longest and closest cooperations is with Panasonic, as Tesla and the Japanese battery manufacturer jointly maintain a factory in Nevada. A battery is the most important part in an EV and also the most expensive one. In fact, the average cost of an EV battery is between 30% and 57% of the vehicle's total value, and this alone indicates how important batteries are to EV companies like Tesla. Not only that, but battery anxiety is one of the main reasons why some people refuse to switch to EVs, so EV companies clearly understand the importance of developing batteries with impressive ranges that will reassure potential customers. This is why Tesla is pressing ahead with setting up its own production of 4680 battery cells at its plant in Texas. Now, if you're not familiar with what that is, it's a new round cell battery format that was presented at Tesla's Battery Day event in 2020. This revolutionary battery will allow Tesla to reduce battery costs by up to 50% thanks to a number of innovations, such as the dry coating of the electrodes and the tab-less design. It's very likely that Elon Musk and Tesla's management team will be asked about this new battery during the Q1 earnings call, so we might actually get answers on when they'll be used in Tesla cars, as well as what the current output looks like. You might also remember that, in February, rumors emerged that Tesla could expand its battery cell production in Nevada with equipment from the Chinese battery giant, CATL. However, CATL would not be involved in the production itself. According to Bloomberg, the project is a planned battery production facility in Sparks, which is independent of Tesla and Panasonic's Giga Nevada. In particular, LFP cells for Tesla's stationary Megapack batteries will be produced there. Tesla's battery investments are important to the company because they are part of its long-term growth strategy, because the company wants to be able to offer an affordable EV, and if it can reduce its costs and improve efficiency by designing and producing its own batteries, then it can make its EVs more affordable for consumers and sell them profitably. Aside from the LG Energy Solution and CATL partnerships, Tesla is also investing in batteries in other ways. In fact, it was recently reported that the company will start construction on a battery factory in Shanghai next month, which will be capable of manufacturing 10,000 lithium-ion batteries a year. This battery factory would complement Tesla's Shanghai Gigafactory perfectly, which produces 750,000 vehicles per year, meaning Tesla could make its own batteries for the made-in-China cars, which could help it reduce the costs on its made-in-China vehicles, and in turn, weather out the tough competition in the Chinese market. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Even if we get really strong earnings, is that enough to rescue the rally? How are those two dynamics going to play out?
Yeah, I think it's tougher. I mean, the market's, at the end of the day, is going to be driven by earnings. And if earnings can continue to outperform higher expectations, which I think earnings expectations for the full year are still a little high, of course, we can have that. But there may have to be some cost cutting come in, and that's where I think the connection to the economy comes in, because if there is cost cutting, you might see a pullback in the job market, and then you really do get to have the Fed cut, because the Fed wants to cut. They just, the economic data, the broad economic data hasn't been supporting that. And I think it's because of a lot of the fiscal stimulus that's been out there.
Yeah, you do get that sense that this is a Federal Reserve that wants to cut rates. Whether or not it should, of course, is the big debate right now.
Your key takeaway, and I think for many investors is right now, what are the priorities? And that's it. The priority right now is robo-taxi, but for a greater good, for a broader, cheaper offering.
Yeah, I was talking with some of our colleagues at BNEF, and I think, the idea that maybe what Elon may make the case to Wall Street tomorrow is, we already have a $25,000 car. He will be spinning when he says that, but when you sort of take into account gas savings and tax credits and so on and so forth, the Model 3, after the price cuts of the last year plus, is getting pretty darn close to that. And so, I think that what we'll see from Tesla in the months to come is this attempt to kind of, further emphasize the value that they're offering with the Model 3 and the Model Y. Per Ed's reporting, apply some of the work that's going into the platform that they want to use to underpin the robo-taxi to bring the Model 3 and Model Y costs down even further. I think the real question is whether or not that's going to cut it for Wall Street.
Yeah.
Because they want to see some new products.
You might not hear many Wall Street analysts saying this, but there's no denying that Tesla's future depends solely on the new technologies the company pushes out. Technologies like FSD, humanoid robots, as well as the new 4680 batteries that the company needs for the Cybertruck are what will drive growth going forward. And while getting an affordable car out there is extremely important, we can't act like there's a trade-off between that and Tesla going all in on autonomy with FSD and robo-taxis. For instance, Elon never said that Tesla's affordable vehicle was completely cancelled, and this is something we might hear him talk about in the Q1 earnings call. Moreover, Tesla's competitive edge is in technologies like these, because many automakers, including Tesla's main competitor BYD, can release affordable EVs, but none of them comes close to what Tesla has achieved in autonomy and full self-driving. We think that Tesla's current growth phase will focus on developing its new technologies and batteries until it perfects them and reducing costs. We've already seen that Tesla laid off around 10% of its employees to save costs, and we've estimated that this would save Tesla around $1.4 billion a year. Tesla also decreased its FSD prices to increase adoption, and while things like this and the layoffs won't really be positive for the stock right now, they definitely will be in the future as Tesla starts profiting from its new technologies, either by launching a vast robotaxi network or by offering to license its FSD software to other automakers. Additionally, it could start selling the batteries it makes to other automakers, which could unlock a new revenue stream for the company. Finally, we have a piece of advice for investors who are currently anxious about the stock price and where it might go after earnings. This is a company that constantly innovates with new technologies, so the stock will fluctuate in the short term since it gets treated like a tech and AI stock rather than an EV stock. For this reason, it might be a good idea for investors to just lower their short-term expectations and get a long-term investment horizon, which would certainly help. Remember, the majority of analysts on Wall Street are more like traders than investors, expecting great results right away so they could make a profit. On the other hand, investors hold the stock of the company they believe in for a long time and witness its stages of growth, which is certainly what's happening with Tesla right now. With this in mind, will you load up on more Tesla shares after earnings? Let us know in the comment section. If you would like to know more about the latest updates about Tesla and the EV market, then go ahead and click on the next video on your screen. See you there.